Hello and welcome to our live session today with Peter. So, what's new in the FX market?
Well, we had a correction low of the US dollar yesterday. It was practically relenting some of the gains made on Friday. On a fundamental level, I would note that it seems as if the possibility of the US defaulting on its debt is weighing on the market sentiment. Especially given that today we are to have a meeting between the White House and Republicans. Our expectations are low. Base case scenario for the time being seems to be that there will be another deadlock. Mind you that Biden is to go abroad for trips, so that may stall the whole procedure even further. Other than that, I would be noting also that we had some movement regarding the Aussie. We saw practically RBA's meeting minutes from May. The minutes sent mixed signals, may have been tilting a little bit to the dovish side. There was little reaction. The actual market mover for the Aussie during today's Asian session was more or less the Chinese data for April. We had the industrial production growth rate, we had the urban investment growth rate, we had also the retail sales growth rate. All three of them tended to disappoint traders in the sense that the urban investment rate slowed down. It was expected to accelerate a bit. The industrial output accelerated, but not to the degree it was expected, and the same applied also for the retail sales growth rate. So overall, the Chinese data for April tended to disappoint traders, and they put a question mark regarding the recovery of the Chinese economy, whether that's being performed at the intense rhythm that was expected or not.
How about US stock markets?
US stock markets edged up yesterday, and it was interesting in the sense that they edged up despite Fed policymakers actually sounding a little bit more hawkish. We had a number of Fed policymakers which tended to imply that they would prefer rates to remain at high levels, at the current level, for a prolonged period of time. Mind you that the market expects the Fed to actually start cutting rates in September onwards. Even some have mentioned the possibility of another rate hike. So that was a little bit more towards the hawkish side. I would be noting that there are still some earnings reports which tend to be of interest. I would note today the release of Home Depot, especially about the retail sector. And I would be also noting Baidu as well as Vodafone.
Mm-hmm. And what's in today's calendar? Let's start with the European session.
Well, we had already the UK employment data for March. Now, the unemployment rate remained, actually ticked up to 3.9%. I would note that the tick-up came despite actually the employment change figure improving, rising to 182K, while the earnings growth rate slowed down, actually ticked down to 5.8%. Now, despite the mixed signals, I would be noting here that overall there seems to be a quite tight UK employment market, which seems for the time being to still remain strong despite the tightening of BOE's monetary policy, and could allow practically the bank to proceed with more rate hikes to come. Overall, I saw a little volatility on the pound at the time of the release. Other than that, I would be noting right about now, we should be getting Eurozone's second estimate of the GDP rate for Q1. It's expected to remain unchanged to the preliminary release, so not much there. But also right now, we should be getting Germany's CEF indicators. They are for May. And interestingly enough, both the economic sentiment indicator as well as the current conditions indicator are practically expected to drop. Should that be the case, that would imply practically that investors become more pessimistic about the outlook of the German economy, but at the same time also show that the conditions on the ground for the German economy are deteriorating. Mm-hmm. So that release could weigh on euro somewhat.
What's expected in the American session?
We have a number of releases from the US. I would be highlighting the retail sales growth rate. It's for April. It's expected to accelerate. That would be a positive sign for the demand side of the US economy and could provide some support for the US dollar. On the flip side, we're also getting the industrial production growth rate, also for April. And it's expected to slow down, implying that more or less the manufacturing side is easing, and that may weigh a little bit on USD. Also, I would be highlighting, as for financial releases, from Canada, the release of the inflation rates. A possible slowdown could weaken the Canadian dollar, as that would imply practically that more or less BOC's stance to actually pause rate hikes may solidify, at least in the market's perspective, and that could weigh on the CAD. Other than that, I would be also noting that we have a very high number of Fed policymakers which are scheduled to speak. I would start with Cleveland Fed President Mester. Also, let's note Fed Board Governor Barr, Atlanta Fed President Bostic, New York Fed President Williams, Richmond Fed President Barkin, Chicago Fed President Goolsbee, and overall, given the rather tight employment market for April and the fact that we did not actually see a considerable slowdown of CPI rates, I would expect Fed policymakers to lean more towards the hawkish side as they did yesterday. And in such a case, we may see the USD gaining some support.
And what about tomorrow?
Well, tomorrow we have another Fed policymaker speaking. That would be Atlanta Fed President Bostic again. But I think the main release, or most of the interest, is going to be on the Aussie. We're getting Australia's wage price index. It's for Q1. Now, we have to understand here that the release is being made ahead of Australia's employment data on Thursday. So practically that would complete the picture. And should the rates more or less accelerate, that would imply that the Australian employment market may continue to feed inflationary pressures within the Australian economy. And more or less that could provide some support for those.
Thank you, Peter. Stay tuned for our next live session with Peter.
So I apologize for the technical issue. I would be noting here that once again, my name is Peter Yosef, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame, unless otherwise stated. Please note that the first thing that we note for the US dollar index that has broken over the past 48 hours the upward trend line which was guiding it. So that forces us to switch our bullish outlook, initially in favor of a sideways motion. But we note that the bearish tendencies, the bearish movement, especially during today's European session, seems to be intensifying. I would expect that for the time being, I would maintain my bias for the sideways motion to continue, but I would be also warning for any possible downward motion. And should the bears take over, I wouldn't be surprised to see the price action dropping below the S100 and 155. And that has to be a clear break, allowing the US dollar index to actually start aiming for the S200.65. On the other hand, should the bulls take over, we may see the price action of the US dollar index rising, breaking the R100 and 245, and start aiming for the R200 and 305, maybe even higher. Let's have a look at Euro USD. Okay, in an interesting move here, we have a new low which reaffirms practically the level of support line. Let's readjust this. You can see how this level provides support here and also some resistance here. So I'm going to be taking this as a new resistance support line. And that would be the 1.0845. That forces us practically to switch also other resistance lines like this one at the 1.965. Yep. Also the R2 could go a little bit higher, practically meeting the peaks here and here. And that would be at the 1.0890. Sorry, 1.1090. With the 1.2020, sorry, with the 1.1220, let's have a look where that rests. Okay, seems to be good. I'm keeping that one. Also, let's have a second look at the support lines, starting with the S2 and the S3. Measured bid could go a little bit higher, just about here. 1, 2, 3 tests. And the S2 is now being set at 1.0715. The S3 at 1.053. Let's readjust the chart. 1.1220 remains unchanged. The R2, which is now being placed at 1. Sorry, my bad. Let me readjust this. $1.109. The R1 at 1.0965. . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . the S1 at 1.0845, the S2 at 1.0715, and the S3 at 1.0530. A little bit off, but okay. Let's log everything in. So we're ready to discuss direction here. Definitely the breaking of the downward trend line highlights, along with the fact that the price action has bounced on the 1.0845 support line, which we have just noted. So that tends to highlight the prospect of a sideways motion. Note that there is indicators on the rise aiming for the reading of 50, highlighting exactly how the bullish effect is, or if you prefer, the bullish sentiment is fading away. A possible stabilization between the R1 and the S1 seems to be a plausible scenario for now, given also the low volatility. Note also how the Bollinger Bands have been converging, another sign of low volatility. On the other hand, should the bulls take over, I wouldn't be surprised to see Euro USD being on the rise, breaking the R1, 1.0965, and start aiming for the 1.1090. On the flip side, should the bears be in charge, we may see the price action dropping, breaking the S1, 1.845. We definitely would require a lower truth on this one, and that would pave the way for the 1.0715 at a later stage. Now let's have a look at cable. Cable seems to have been hitting a ceiling at the 1.2540. We had discussed the possibility of a sideways motion of the pair after breaking the downward trend line guiding it. That was made also yesterday, so we tend to maintain our bias for the sideways motion to continue, given also that the RSI indicator is running along the reading of 50, actually just below it. It's currently at 50.7 right now, jumped above it. But overall, I would be noting that there is, or seems to be at least, a rather indecisive market about the direction of the pair's next leg. Also, the convergence of the Bollinger Bands tends to highlight this low volatility. So the base scenario for now is for the sideways motion to continue, given that we had also little, if any, reaction from the release of the UK employment data, which were a bit mixed. It would be interesting to see in the minute chart. Allow me to drill into the 1 minute chart. And let's go back at the moment of the release and have a look how that affected the market. And that would be at this candlestick here. We can see a slight rise, but note the wide correction lower later minutes in the next half an hour. Nevertheless, the price action corrected higher and rebounded back to the previous levels, moving even a little bit higher. So practically the end effect was very low. We're talking about a drop of around, let's have a look, 45 pips in the first 10 to 15 minutes. Could be a respectable movement. Back to the 4-hour chart. There you go. So we have mentioned the possibility of a sideways motion being maintained. Should the bulls take over, I would require the pair to rise above the R1, 1.2540. Please note that it's testing it right now as we're speaking. But I would require a clear-cut rise, breaking above the R1 and start aiming for the 1.2770. Should the bulls be in full force, we may see that price action of cable actually reaching, if not breaching, the R2. On the other hand, should the bears be in charge, we may see the price action dropping, breaking the S1, reaching or breaking the S1 on 1.2350. We have this very beautiful note by a viewer here which highlights, yes, practically the viewer has highlighted how the 50 and the 100 moving average have flattened out, exactly reflecting the sideways motion of the pair. It's a very valid comment, and yes, I would adopt it. That's also supporting the idea of a sideways motion, at least for now. Let's move now to USDJPY. USDJPY, which rose above the 135.40, that was since yesterday, but interestingly enough, it has broken the upward trend line guiding it, and that tends to prompt us towards a sideways motion scenario, probably just above the S135.40. Please note that there is an indicator has been dropping nearing the reading of 50, implying that more or less the bullish effect seems to be fading away, or if you prefer the bullish sentiment. So for the time being, base scenarios for the pair to remain in sideways motion just above the S135.40. For a bearish outlook, I would require the pair to drop, break clearly the S135.40, and also start aiming, if not even reaching, the S233.55. On the other hand, should the bulls be in charge, we may see the price action rising, breaking the R137.75, and that would practically pave the way for the 139.40. Okay, let's move now to USD-CHF. Despite the low volatility, USD-CHF was able to drop, clearly break the upward trend line guiding it, but also break the 0.8935. Note there is an indicator which has dropped below the reading of 50, implying that a bearish sentiment is slowly building up, but the market for the time being is still undecisive. So for the time being, let's correct the S1 and turn it from a support line to a resistance line, given that the price action has broken it. Let's go hunting for a new ultimate support level. We're going way back, and I'm afraid that we will not find any. We would have to go practically back to the daily chart. Okay, drilling out to the daily chart. Whoa. We had to go back to 2015 for this. This is the infamous market intervention which the Swiss National Bank made in the markets buying CHFs. And it was interesting how at that point practically the pair here dropped at around 3,100 pips. That was performed within one single day, even less. Nevertheless, should we look for another support line, I would be placing this one, this true here. It was the low point practically of the 23rd of January 2015. Okay, it could be a little bit narrower, but still. Let's readjust this, go back to the forward chart. It's indicative of the fact that we had to go back to 2015 to actually find a support line of how low the S3 goes. 0.85, 86.75. Let's correct the labels as well. Starting with the R3, which is now being placed at 0.9115. The R2 at 0.9020. The R1 at 0.8935. The S1 at 0.8860. The S2 at 8760. And the S3 at, let me give it a look, another one, at 0.8675. Locking everything in. Now we can talk direction. On the one hand, okay, definitely the fact that it has broken the upward trend line tends to imply a possibility of a sideways motion, but note that there seem to be some bearish tendencies in today's European session which push the pair lower, actually below the 0.8935 support line, now turned to resistance. And should those be enhanced, I wouldn't be surprised to see the price action of USD CHF reaching all the way down to the S1 0.8860, maybe even break it. On the flip side, for a bullish outlook, I would require the pair to rise, break the 0.8935. A higher peak than this would be required, so in that case, we may see the price action of USD CHF starting to aim for the R2 0.9020, if not actually breach it. To tell you the truth, I would require the pair to rise up until and break the R2 before actually adopting a bullish outlook. Okay, let's move now to the Aussie. AUD USD, which rose, let me readjust a little bit, rose above the 0.6690 resistance line. It dropped. It's actually testing it once again right now and hasn't clearly broken it yet. For the time being, let's turn this into support line. It could be broken. I wouldn't be surprised to see it being broken also, but for the time being, I'm correcting this. Sorry. Moving back. Nice peak here. Could be a little bit lower. Okay, this is the one. In red, the 1.703. Readjusting the chart. Let's correct the labels as well. Once again, one could leave the 0.6690 resistance line as a resistance line. It seems to be imminent that the pair is about to break it once again to the downside. The S2 is now being placed at 0.6580. The S1 at 0.6690. As it acts as support line, note how it has broken it once again. But I would require clear break in order to break it back into a resistance line. Now we have the R1 at 0.68, the R2 at 0.6920, and the R3 at 0.7030. Locking everything in. So we tend to maintain a bias for a sideways motion to continue with the price action practically revolving around the S1 0.6690. I would be noting some slight bearish tendencies which could be pushing the price action lower for the time being. Note also how the 20 moving average has exactly reflecting this downward motion. On the other hand, the 50 and the 100 moving averages are remaining flat, supporting or at least implying a rather sideways motion. Should the bears take over, though, I would expect the price action to clearly break the S1 0.6690 and reach all the way down to the 0.6580, this level here. On the flip side, delete. Should the bulls take over, I would expect the price action to rise and reach, if not breach, the 0.68 resistance line. Let's move now to USD CAD. Okay, nice downward motion here. But it seems to have been interrupted, and that's the interesting part. Allow me to drill into the 1 hour chart. Let's draw the downward trend line with more detail. It has been broken. Okay, the stabilization of the price action of USD CAD for the time being seems to remain rather sideways motion, and it's indicative that the RSI indicator is running along the reading of 50, implying a rather indecisive market about the pair's next leg. Okay, I understand that the R1 and the S1 are boundaries, but to tell you the truth, the sideways motion is minimal right now. It's very, very subtle. I would expect the pair to maintain the sideways motion, yet we have high impact financial releases for both the US side as well, USD side, as well as the CAD side of the pair during today's American session. So we may see some enhanced volatility or even a change of direction. Should that be the case, we may see the price action being guided by the bulls, and that could lead the pair upwards, breaking the R1 on 1.3545. I would require this for a bullish outlook, and that would pave the way practically for the 1.3665. On the flip side, should the bears get control over the pair's direction, I would expect the pair to drop below the 1.34 support line, which would be opening the gates for the 1.3270. Okay, let's have a look at gold. Okay, let's make some slight corrections, a little positioning of the labels. And at this point, I think we are going to be discussing yesterday's movement reaffirmed this level as a possible support line. And that would be the 2000. All other levels remain unchanged. Maybe a slight rise here to meet these levels here. 1970 remains. 1975? Yep. No. Okay, so this is it. We have a resistance line at 2020, maybe 2021. Okay, but overall there seems to be a sideways motion between the R1 and the S1, and we tend to maintain this outlook. But note how the RSI indicator is dropping, distancing itself from the 50 reading and aiming slowly but steadily towards the reading of 30, implying that we may see the bearish sentiment building up in the market. Should the bears maintain control and actually expand their influence, I wouldn't be surprised to see the price action of gold dropping below the S1 2000 support line and start aiming for the 1972 support level. On the flip side, should the bulls take over, I would require the precious metals price to rise, break the R1 2020, and start aiming for the 2050. Let's have a look also at WTI. Nothing much here. Also in now's downward motion. Interestingly enough, here a slight rise. $969.20 and cents up. The resistance line remains. This resistance line remains as well, as does the R3. Okay, we're sticking to our guns here. So we tend to maintain a bias for a sideways motion to continue. I would note that we had a downward motion. You can see it here where we have a peak, then a lower peak, a true, then a lower true, and a lower true. But the bouncing on the 6920 practically interrupted the downward motion. It's characteristic how the last peak is even slightly a couple of cents higher than the previous one. And that tends to more or less imply that the downward motion has been interrupted and the sideways motion emerges here. Note that the RSI indicator is, okay, it has broken above the reading of 50, it's dropping right now, and maybe consistent also with the downward motion during today's European session for black gold. Should the bears take over, I wouldn't be surprised to see the price action dropping, breaking the S1 6920, and start aiming for the S2. Let me reposition this a little bit. 6430, albeit it's still way down before it reaches the S2. But nevertheless, for bearish outlook, we would require clear break of the S1. On the flip side, should the bulls take over, we may see the price action of WTI be on the rise. I would require for a bullish outlook a clear break of the R1 73.90, in which case practically that may open the gates for the R2 76.80, which is still way off. Main targets and limits to keep an eye out would be the S1 and the R1 for the next 24 hours, in my opinion. On the other hand, though, we may see increased volatility due to the high impact financial releases from the US. Should overall the negative correlation between Actually, I would expect that the sideways motions to continue, yet the first resistance line and the first support line are to be the levels to be aware of. Some analysts have mentioned the possibility of a strengthening US dollar practically pressurizing oil prices. For the time being, I don't see that coming, even despite having high impact financial releases from the US today. I think fundamentals regarding oil remain key, and in that case, it's more about supply and demand, with the demand side weighing, given that market worries for a possible recession, not only in the US economy, but also during also in the Chinese economy, not a recession as such, but a slowdown, may create worries about the demand side of the black gold. Okay, let's have a look also. It's a quick glance at at Dow Jones. Okay, it has broken below the 33,500 and remains in sideways motion. Let's correct this. Let's go hunting for a new ultimate support line. $30,970. Nope, 65. Even lower. Yep. Now widening the chart, readjusting it. Starting with the R3, which is now being placed at 34,920. The R2 at 34,160. And the R1 at 33,500. Starting with the S1, which is now being placed at 32,830. The S2 at 31,730. And the S3 at 30,960. Overall, we tend to maintain a bias for sideways motion, yet today's financial releases, along with the earnings reports, which we have mentioned also in the fundamentals, may increase volatility for US stock markets, so be on your guard. So from all of us here at IronFX, best wishes for solid trading.
Hello everyone! The term risk-off refers to the mood of traders and investors in the financial market when they want to avoid risk exposure and safeguard their funds. When traders are pessimistic about the economic outlook, they tend to sell risky assets and buy safe haven assets. In such an environment, safe haven assets like the Japanese yen and gold tend to gain in value, while high-risk assets like stocks and commodities tend to decline. Markets are frequently labeled as risk-on or risk-off. Both of them express global market sentiment. Risk-on, risk-off is frequently abbreviated as RORO. This happens when price behavior is driven by investors and traders' changes in their risk tolerance. When traders are not optimistic, then they tend to reduce leverage, selling risky assets and buying safer assets or even preferring cash. US Treasuries and German bonds are considered almost risk-free. The US dollar, Japanese yen, and the Swiss franc are safe havens and tend to rally when traders want safety during times of uncertainty. The price of gold usually increases and the yield on government bonds falls. Thank you so much for watching us today, guys. Stay tuned. Bye-bye.
Let us begin. So yeah, welcome to another webinar series brought to you by IronFX. So today we'll be going through the Fibonacci series, 3 out of 4 on expansions. So I got to read the disclaimer first, so do bear with me. So the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So this material is just the personal opinion of the author, which is myself, and the client's investment objectives and risk tolerance have not been considered. So IronFX is not responsible for any loss arising from any information contained. Redistribution of the material is strictly prohibited. Hey, hi there, Andrew Robinson. Okay, I was just about to start the webinar on Fibonacci series, part 3 of 4 on expansions. Okay, just a very, very quick introduction to myself. My name is Chen Yongting and I'm actually from Everest Fortune Group. So we are actually the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So right now we actually have a very, very special collaboration with IronFX where we are bringing you guys the good stuff. Okay, before we begin, so I'll just show you guys. So if you want to find out more of these free webinars like this in the future, you can go under ironfx.com, under IronFX School, under webinars. So you can click on it, and then I'll send a link to the chat also. So that's where you can sign up for future webinars like this. Okay, where's it? Webinars. Okay, where's that link? Okay, I think I have an ad blocker in place. Okay, it's right here. At the bottom. Okay, I just saw it disappeared again. All right, here. Okay, so yeah, right there, Fibonacci series, 3 out of 4 expansions. Next, we actually have Jindal and Sarah, which is tomorrow. Okay, there's also the IronFX YouTube channel. You can actually watch replays on the past live that we have actually went through. So I'll send the link to the YouTube channel. You guys can check it out there. And last but not least, if you want to contact me outside of this webinar, you can actually contact me through this link right here. I just send the link to the chat already. It's a Linktree link about myself. Is basically a portfolio of myself, LinkedIn profile, and everything else about me. So feel free to check it out. Follow me there if you're interested. Ask me any questions that you want outside of this webinar. All right, let us begin. Okay, so a few topics to cover today. Few agendas, a recap on Fibonacci retracement essentials, ideal market structure, significant swings, and following the market trend. We also have the different Fib retracement levels and what are Fibonacci expansions, which is the main highlights of this webinar, and going through confluence levels. So let us begin. So Fibonacci retracement checklist, just a very, very quick look at this. The market structure, is it clear or not? Look for big zigzags. So actually you notice that the market is moving very, very closely along the Fibonacci trend line. So you can actually see this nice little blue line right there going through the charts. Let me clear this out. So it's actually a very, very clear structure, very, very clear downtrend, bearish market. So identify the recent trend, prices going up or down. In this scenario, it's going down. So you connect the two extreme points, drawing from the top of the swing high, which is the starting point, to the bottom of the swing low. So this is how you draw a Fibonacci retracement. Okay, looking at this, insignificant swings. Recap. You're not going to care about all these tiny, tiny movements on the chart. Take a look. So look at this GIF, is actually drawing out all the insignificant swings or using the orange highlighter. It's too insignificant, so you cannot just draw randomly, you know, from this tiny little swing up to this high right there. It's not significant enough. You need to be drawing from this significant swing low right there to this highest point somewhere there. So you draw the Fibonacci, it should look something like this. That is a proper significant swing. So if you want, I can actually show an example on the chart. Maybe there's an example. Okay, insignificant swing showed you already. This is too insignificant. All these kind of swings right here, too insignificant to even draw out. Okay, let me see. So this is actually a very, very nice significant swing move right there. Can see? From a swing high, drawing towards a swing low. So it's actually a significant move up with obvious, clear market movements. Okay, let me check the previous slide first. Did I miss out anything? Okay. Next, drawing a significant swing. So here's another example of significant swings. So I've actually drawn out the peaks and troughs to point out exactly how clear it should be. So this could be a significant, where is it? Significant swing points towards the downside. So you should only be focusing on this. This is just minor swings, which is insignificant. Focus on this that I've circled out, drawing the Fibonacci from the top to the bottom. So it's a very, very clear-cut swing right there. Okay, next, let me move on. So next, following the market structure. So the Fibonacci retracement, here's an example of how to not draw a Fib retracement trend line. Your Fibonacci trend line must follow price structure clearly. Hello there, Olivia Ponche. What time frame do you use? Well, time frame doesn't matter. Even on 1 minute, you have to find something that is significant. It even works on the 1 hour time frame, 4 hour time frame, 15 minutes time frame. So I'll show you. Since you're asking that, I'll show you an example. Okay. Let's move on to the live chart first. So let's start from the daily. The daily chart. So if you want to draw a Fibonacci trend line from the daily chart, you should be drawing from this significant swing high right there to the next significant swing low right there. So in order to use the Fibonacci trend line, the tool is right here on the left side of trading view. You should be going right here. Trend line 1, 2, 3, you expand it out. It should be called the Fib retracement tool. So you draw it from the top of the swing high, draw it to the bottom. You notice that it's very, very nice. There's a very, very significant swing. So clearly, price is currently trying to reach towards the 50% Fibonacci retracement line. So it's right here at the 50%. We can possibly see, so for example, right here, euro dollar to likely head towards the 1.09440 level, which is also the Fibonacci 50% retracement. Okay, let's move on down towards the daily, towards the 4 hours chart to draw another one. So let's move down to the 4 hours. So we are looking at a significant swings. So this could be a very, very significant swing. So a swing right here towards a significant swing towards the downside. So you can actually draw a Fibonacci line from the bottom towards the top. You actually notice that price actually retraced back down towards the 61.8% before it continued pushing bullish. So another point you can draw out is, since that point swung up, this was a significant swing, and then this was a significant swing high. Same thing, you draw a Fibonacci line from the bottom to the top. It's following very, very closely, very, very nice. And then it swung down. Where did it retrace towards? That's the question. It retraced towards the 61.8% Fibonacci line before pushing higher. All right. So let me find a clear-cut one. So there isn't anything clear at the moment that we can actually draw out. Okay, let's move down. Okay, before I move on, this could also be another significant swing. Look at this very, very obvious swing towards the downside. You can start to draw a Fibonacci line. Drawing from the top to the bottom, and you notice that price also retraced back up towards the 61.8% Fibonacci line before rejecting back down. So that's a very, very nice way to draw your Fib levels. So next, let me show one last example before we move on towards the 1 hour chart. It's actually the same on all time frames. So this is a significant high, significant low. Can draw price actually retrace all the way up towards the 61.8% before rejecting towards the downside. So time frame doesn't matter as long as you know how to draw your chart properly. Everything works well. Hey, hi there, Xion on Yen Ni. Hi there. Let's move on towards the 1 hour chart. Okay. So by the way, those who have just joined, I've actually turned on the chat already. So you can ask me any questions there within the chat. You can talk to me there. Ask me any questions while moving on. If you do not understand, feel free to ask any questions. Do not feel that you are slowing down the entire webinar. If you do not understand, that's what we are here to. We are here to learn. So looking at this 1 hour chart, this could be a significant swing high. This was a swing high. It went all the way back down. A significant swing low. It retraced back towards the 61.8% Fibonacci line. So it went down, tapped, and rejected towards the downside. Okay, next. This was also a very, very obvious. You only would be drawing Fibonacci line at the very obvious points. Significant swings. So you draw a Fibonacci line from the top towards the bottom. Price actually retraced from the bottom towards the 61.8% Fibonacci line before, it kind of short sellers try to take over, but the buyers took hold. So likely we can see euro dollar continue moving to the upside. Okay, so just move on 30 minutes. I'll just continue making it faster and faster. So this is actually quite a significant swing also. Significant swing, it actually swung up, hit back down, and retraced back up. So you can draw a Fibonacci line from the bottom towards the top. It likely retraced towards the 23.6% Fibonacci line. You can see right there. Very, very clear cut. Price very, very nicely moving. Hit back down, retrace, and short right up. Hey, hi there, Rajesh Rama. And hi there, Tivin Campbell. Okay, Juha, you actually want to see Brent's oil retracements. Well, let's go towards that. So if you are watching on your computer, feel free to open TradingView. Let's practice this together. Hopefully we can improve our trading together. Okay, let me turn on crude oil. All right, crude oil, Brent crude oil. Okay, looking at this, okay, maybe I should move towards the 1 hour chart. It's a very, very obvious significant swing high right there that we are looking at before price swung all the way down. So we can actually draw a Fibonacci line from the top to the bottom, and you notice that price likely just tapped very, very nicely within the 50% Fibonacci line before it rejected towards the downside. So you have these very, very clear cuts, very, very obvious, and it's extremely clean. You notice it's very, very close to with the Fibonacci trend line, bearish trend line. So next, another one I would like to show you. Looking at this specific scenario, very, very obvious swing, very, very obvious swing low. You can draw a Fibonacci line from the top to the bottom. Price actually retraced back up to the 78.6% Fibonacci line. So it's quite a high retracement. Price followed very, very nicely before it retraced back up and shot towards the downside. Okay, let's move on back to the chart, to the PowerPoint presentation. Okay, so let's go through this one more time. Fibonacci lines, retracement lines should not cut through two large areas of the market structure. So in this specific scenario, this actually cut through the trend line. It's not valid anymore. It's not clear. It should be following the market structure very, very cleanly. So when you're drawing a trend line, you should follow the price of movement and not deviate too much. Any questions so far? Feel free to let me know in the chat. Okay, let's move on. Okay, as I mentioned just now, through that practice that we had, price is following very, very nicely with the market structure. So you saw it's following very, very nicely. That's how you should be drawing a Fibonacci retracement trend line. So it works well when it follows price movements, and Fibonacci lines actually work better on higher time frame. Why? It's because it's due to less noise. Less noise as in less deviation away. So price does not move away too much from the Fibonacci trend line. Okay, next, let's move on. Okay, clear market structure. This is actually very, very clear cut. This is a very, very nice market structure. So although a Fib retracement can also be used in both choppy and trending markets. So it's important to look for clear market structure. So in this case right here, clear swing high, swing low, clear swing high, and a clear swing low. Then clear swing high again, clear swing low, and another clear swing high. So if you want to screenshot this, please screenshot this now before we continue. You can whip out your phone, take photo before we continue. Okay, next. This is a very, very unclear market structure that we do not like at all. Okay, so you see, price does not, where is it? Price, there's no significant swings at all. Price is very, very choppy and it suddenly moves up. Even the downward, it deviates. Let me clear everything. Even if you try to draw a Fibonacci line from the top of this swing high towards this swing low, is totally wrong. It's because price, this area deviates quite far away from the trend line. Same thing if you draw from the bottom to the top, the bottom right here to the top, if you actually draw a line across, it's not that clear because price went up and it's this area, it actually retraced too much. So it deviates quite far away. What you want is for the trend line and price to be relatively close with it. Okay, let us move on. So there are actually Fib numbers that we typically use in trading. You can actually take a screenshot now if you want. Please screenshot this down. It's very, very important. Screenshot this down and please apply it. Please try to apply Fibonacci trend lines when you are trading. So now that we know how to draw the Fib retracement trend line, let's look at the different types of levels ranging from negative to above 100%. So although the tool used is Fibonacci retracement, it can lead to 3 types of Fibonacci expansions, those below 0%, which is the Fibonacci expansions right here, negative 61.8% and negative 27.2%. You will only be using these two. So retracements, those from 0 to 100%, which is the regular ones. Right here, regular ones, 0 to 100%, and extensions, Fibonacci extensions for those above 100%, which is the 127.2% and the 161.8% Fibonacci extension. So we will go through expansion and extensions more in depth in the coming webinars. So in this webinar, we will just briefly introduce the levels. So I'll give you guys one last chance to actually screenshot this down, take a photo before we continue. All right. Okay, let us move on. Okay, here you can see all the different Fib numbers that we mentioned in the previous slide and how it looks drawn out. So take a note of the starting and ending points. So we started drawing from here and ended drawing here. So take note of the starting and ending points of our Fibonacci trend line, the mid-range retracements, negative expansions. So the negative Fibonacci expansions are right here. And the above 100, the positive Fibonacci retracements. So in all of these 3 Fibonacci scenarios, we are only using one tool at the end of the day, which is the Fibonacci retracement. All right, let's move on. Okay, today we'll just be focusing on the negative Fibonacci expansion. So using the Fibonacci retracement tool, we make use of the negative levels, namely the negative 61.8% and negative 27.2% Fibonacci levels. So when using the tool, look out for flash, zigzag, or lightning symbol. So ideally, price should retrace at least 50% in 0.3 as shown in the video right here before reversing off. So take a look, draw from starting to ending, retrace at least 50%. Before you notice, price actually rejected off the negative 27.2% Fibonacci line. Okay, take a look. It looks like zigzag, like a Harry Potter zigzag line. So the explanation, the clearer the movement of the flash zigzag, the better. We ideally need to wait for prices to retrace at least 50% in 0.3 before taking off in the other direction. Okay, so maybe I'll just watch through it one more time. It actually rejected right here, rejected back down towards the downside. Okay, next, Fibonacci expansion. Okay, let me see. So here is an example of expansion and how it plays out. So starting and ending points, take note of it. Starting right here, ending point right there. Price actually retraced back up to the 61.8% level. So we show how to make use of the support in the negatives. So potentially we want to look out for flash zigzag, potentially look for price to retrace back up before heading downwards towards the negative 27.2% Fibonacci retracement line. We take a look, price actually retraced back down towards the negative 27.2%. Okay. Okay. Bounce back up. So take a look, price when it touches very, very nicely within the negative 27.2%, price usually comes back to the ending point. So yeah, please screenshot this down before we continue. Please screenshot this down, just showing examples of how it works. Okay. Next, let us move on. Take a look. Even at the negative 61.8%, price actually tapping ultimately into that. You are drawing from the starting point to the end point, price went up, retraced back down, and went back up towards the negative 61.8% retracements before, heading back down towards the end point, which is right here. So yeah, you can actually use the negative expansions, negative 61.8% and negative 27.2% as a potential take profit target. So once price steps into that level, you can look to actually close out your trade already, just in case price reverses back down like in this scenario. So let us continue. Okay, so take note of the shape of the flash. Make sure price reverses to at least 50% before breaking the starting point. So we draw it from the starting point towards the end point right there. So price retraces back at least 50%. So from bottom to the top, at least 50%. And then it hits down towards the negative 27.2% Fibonacci expansion level. So notice price steps into that and immediately bounces right back up. So please screenshot this down also before we continue. This is the example number 3. Right, give it a moment. Okay, let us continue. Okay, so next, looking at, in this GIF right here. So take note of the shape outlined by the orange arrow. So price retraces more than 50% of the Fibonacci trend line. So in this case, more than 100% and reverses nicely off the 27.2% Fibonacci expansion. So take a look, price retraces back down. So maybe we can start doing some, some kind of practice session, intense practice session. So let's find an example. Okay, if you notice right here, I'll be drawing a Fibonacci line from this significance swing high towards the significance swing low. Hey, hi there, Samuel Julian. Nice to see you. So we'll be drawing the Fib from the top towards the bottom. So just now, as I mentioned, price retraced back up towards the 78, at least 50%, 78.6. So we can actually start to see price possibly heading towards the expansion level, negative 27.2%. So you'll notice price actually tapped very, very closely, went down, tapped pretty closely towards the negative 27.2% before it retraces back up. So yeah, this is one example on the live charts. So maybe we can start to look for more. Okay, let me find another one. Maybe likely, possibly looking at the euro dollar. This is a currency pair that I like to look at a lot. Okay. Let me find it on the 1 hour. Okay, let me find a clear one instead. Okay, maybe let's take a look at this. I'll test it out. Okay, didn't bounce, didn't retrace, not good enough. Let me find this. Okay, this is a pretty nice one. If you take a look, instead of 78.6, let me find 50%. So notice, I will be drawing a Fibonacci line from the bottom of the swing low towards the swing high, and then price went up, retrace back down towards the 50% Fibonacci line before pushing up relatively close towards the negative 27.2% level before it actually retraced back down. So just take note, that's how you actually use the Fibonacci expansion levels. So let us find another example, another nice example. Okay, let me find it. Okay, trying to find a clean one, at least 50%. All right, so likely this scenario, so let me test it out. It wasn't close. This is not the greatest example because I'll be drawing from the swing high towards the swing low. Price actually retrace back up towards the 50% Fibonacci line before heading relatively close, not close enough, towards the negative 27.2% before it just shot right up. So let me find another example. We'll be just doing practice sessions like this. Okay. Okay, this is quite nice. Okay, let me draw. Is it good enough? Okay, it's actually not good enough. Why is this not valid? This is not a nice Fibonacci line because price actually deviated quite far away from this trend line right there. So this is not a good example. So let us move on. Let me find another one which is nice. All right. Clean one, trying to find a clean one. Likely this could be possible. Okay, this is actually quite nice. So you notice that price swung from this swing high towards this low, and it retraced back up towards the 50% Fibonacci line right there before it shot down towards the, I think it did hit the negative 27, negative 61.8%. So it actually didn't, it went towards the negative 27.2% Fibonacci expansion line before it kind of consolidated before shooting back up. So yeah, always just try to look at the negative 27.2% as a potential take profit target. Okay, let's find another one. Find another significant swing. So yeah, this is actually quite a nice one. So you notice that we have a pretty much a significant swing right there. So I'll be drawing a Fibonacci line from the bottom to the top. You notice that price actually retraced down to at least the, let me draw it out, at least the 50% Fibonacci line. Price went up, relatively nice, went back down, retested, went back up, relatively close towards the negative 27.2% Fibonacci line before it rejected back down. So relatively close, pretty close, you can start to close out your trade already. So if you're actually aiming for exactly negative 27.2%, you might actually miss your close and not hit take profit. Okay, next. Let's find another example right there. 50%, there isn't anything nice. So maybe I'll move on towards the H4 chart so I can view things clearly. All right. Okay, maybe this right here. It is not clean enough. If I actually draw a trend line, I was looking at this area, wanted to draw a trend line right there. But what happened? It wasn't clear cut enough. It's pretty clear. All of a sudden, it deviates quite far away and it shot right back up. So this area actually caused me to not want to view this Fibonacci trend line as a valid one. Okay, let's find another one to practice. Okay. Okay, this is pretty nice. This is quite nice, drawing from this significant swing high right there. Okay, this is not significant enough. Let me find another one. This clear cut enough. I think I might be looking at one. So this is quite a nice swing high. Okay, but it did not retrace to 50%. Okay, maybe it did. Okay, here is quite nice. So take a look at the H4 chart. So from this significant swing high towards this significant swing low, price is moving very, very closely along the trend line, tap right into it, short right back up, retrace towards the 50% Fibonacci line before heading down towards the negative 27.2% Fibonacci expansion line. So what happens after price steps into that? As we have done many back tests, price actually consolidated a bit before rejecting back up towards the starting points of this trend line, of the end points. So if you actually draw a box over, this is where you draw the fib. All right, any questions so far? Do let me know in the chat, since we are here to learn. Anything you guys do not understand, just ask me. I'll try my best to answer you. Okay, let me check if this is significant enough. Okay, this is actually not bad. So drawing from a significant swing high towards this significant swing low, price is very, very nicely along this trend line, went back up, retested the 50% Fibonacci line before it shot right down towards the negative 27.2 Fibonacci retracement line. So just now, as I mentioned, price usually hits back up to retest the endpoint, the previous swing low. So I'll just draw a box out, an extended box, maybe an extended box red. You notice that price actually more or less hits back up towards that area. So it taps into also the negative 61.8% before it rejected, and relatively near towards the starting point, the end points of the Fibonacci line, and then just continued heading back. So what do we call an area like this? We can call it an overlap resistance. So I'll just type it out in case you don't know how to spell it or don't know what I'm talking about. It's the overlap resistance. So inside center break. All right. So yeah, if you want, please screenshot this down before we continue. Okay, I'll just screenshot this down and send it to the chat. Copy link to chart image, send it. All right, I've just sent the link to the chat. You guys can actually check it out right there. So it's actually quite clear cut on that. We can actually move on. Okay, next. Let me move back towards the slide that we are going through. Okay, this not okay. Invalid Fibonacci. When does a fib retracement becomes invalid? So one of the most common scenarios is when price makes a lower low. Assuming you are drawing a Fibonacci retracement from the top to the bottom, like in the picture. Okay, never mind, like in the picture. So if there are bars on the right that breaks your ending point, it becomes invalid. Just like I mentioned, it deviates quite far away, invalid. There are Fibonacci retracements that are negative 27.2%, negative 61.8%, and we will touch on them as they basically go through your endpoint, yet they are still valid. So take a look. Price breaks the points. We want to draw from the top towards the bottom, but price didn't retrace back up to 50% level, at least 50%, and it continues going down. So this kind of no longer valid already. Always look for at least 50% retracement. Okay, next we are going through combining Fibonacci levels. So it's for confluence to our trade. Okay, give me a moment. Okay, The trick is to find multiple Fibonacci retracement levels lining up together so that you can increase the probability of a bunch of Fibonacci retracement levels working versus a single Fibonacci retracement level working. So this is the definition of a Fibonacci confluence. So I'm just showing a very, very quick example. The negative 27.2% Fibonacci expansion is in line with the 161.8% Fibonacci extension, in line with the 78.6% Fibonacci projection. So many confluence of these levels, and then price just bounce right back up. So maybe I can show an example on the live charts. So let's take a look. I'll try to find one which is nice. So maybe why price bounce right off that area. Likely we can try to see something. Okay, there, negative 61.8 and an expansion. Okay, there isn't a level right there. So I'm trying to find a nice level, a projection level. Okay, we don't have it right there. We don't have it. Not clear cut enough. Expansion drawing up. Okay, maybe we might have something right here. Okay, there's nothing right here. No confluence levels yet. Drawing a fib. No confluence yet. Okay, let me find one. I've got to find an example for you guys so you guys can understand. Wait. Maybe this level. Okay, maybe this nice level right here. So can draw a Fibonacci line. This is quite a nice tick. Okay. So we actually have a nice Fibonacci. We can draw a projection from the top to the bottom and then towards the top again. Likely we might be able to find some kind of confluence right there. Okay, this is very, very weird. Let me move on towards the 1 hour. Try to find one that is significant enough for that bounce. Projection levels. Okay, this could be it. Try from the bottom, top, up. So with the 100%, I'm actually looking at this area right here, checking whether there was any Fibonacci confluence that caused price to retrace back down. Drawing a fib towards the bottom. Okay, there isn't any. Okay, that's weird. Let me just give me a moment. I'm still finding. Okay, this is not the one. Projection, top, bottom, and back up. 78.6%. Draw a fib. Okay, this is actually quite nice. Quite a nice retracement area. I'll draw the 138. So you actually notice that price actually. Wait, give me a moment. Let me clear this out. Trying to stick everything clearly in place. Just to show you guys how it works. So Fibonacci line, then we also have another line or fibs. Okay, this is not the confluence. If you actually draw, notice that price actually tapped very, very nicely in the 127.2% Fibonacci extension level. So I'll just extended box green. So with that two confluence in place, 127.2% Fibonacci extension. Extension is the positive side. Expansion is the negative side. So we also have the 78.6% Fibonacci projection. So that's how we use it. You can possibly look for a buy entry right there for price to tap and rebound towards the upside. All right. Let us take a look next. Let's find another confluence. Okay. Okay, let me find. Okay. Potentially, this might be it. Let me find. All fibs. Okay, negative 61.8%. Showing a Fibonacci expansion, top to bottom. Okay, this is actually quite nice. If you actually take a look, the negative the 78.6% projection and the 161.8% Fibonacci projection. Take a look. So I draw a projection from here. Bam, bam, bam. That's how I draw a projection. Getting the 78.6% Fibonacci projection. We also draw a Fibonacci line from the top to the bottom. We have the, so over here is the 78.6% Fibonacci projection. We also have the 161.8% Fibonacci extension. So these two right there actually added confluence to why price actually rejected back down. So price tapped into that level and rejected strongly towards the downside. So I'll just draw that level out. It's quite clear cut right there. Went up, tap, rejected back down. Where does it reverse towards? It actually reverses towards the more or less the starting points of this Fibonacci high, the previous high right there. So you can call it a support, an overlap support if you want, extended box green. So this could be a nice sell entry that you could have caught right there. So I'll just copy link to the chart image. I'll just screenshot and just send it to you guys. I'll just send the link to the chat already. So any more questions, let me know. Any more questions that you do not understand on Fibonacci confluence, let me know. So let us continue and end this slide. So this another example, negative 27.2% expansion. Just showing examples. I don't expect you guys to, at the end of this session to be able to immediately implement it. You might want to go through some practice drawing on your trading view chart before you start to look for potential buy entries, reversal entries. Okay, let me find what else is needed. All right, for this example, price broke through the negative 127.2% and the negative 27.2%. And then price went towards the negative 61.8% Fibonacci expansion and towards the 161.8% Fibonacci extension. Price then tapped and reversed back down. So that area actually gives us a pretty strong confluence area that price can possibly reverse. Okay, same thing. Drawing down negative 27.2%, 127.2%, and even a 100% Fibonacci projection. So this entire area right here actually added confluence that price could potentially reverse and point back up. So price then proceeded to bounce off this very, very strong level. There's many, many confluence. Here, hi there, Steffi, tap in. Okay, let me go through this. So stop loss beyond, what does it mean? It means that you should always put your stop loss beyond a key Fibonacci confluence area. So the reason for this is because more often than not, price is attracted to such strong areas of Fibonacci confluence, and if your stop loss is right before instead of beyond the area, Fibonacci confluence area, you can potentially hit your stop loss, get stopped right up when the market starts to reverse. And then traders start to complain about getting stop hunted, saying the brokers manipulated the market. It's actually not. It's actually there was confluence. There was a confluence, caused price to tap in before reversing back up. So take profit before. What does it mean? It means that you should always put your take profit target before a key Fibonacci confluence area. The reason for this is because when price reaches the Fibonacci confluence area, the reason for this is because when price reaches the Fibonacci confluence area, there's a high chance that it will not be able to go beyond it, and instead of reaching your profit target, it reverses back to your entry. So always put your take profit target just before the Fibonacci confluence area. Just slightly before, 1 or 2 pips before would be nice. So this is one of the reasons why people complain that the market is manipulated, because they miss their take profit target by 1 pip. So yeah, you can actually screenshot this down before we continue. All right. So once you guys have screenshotted it down, take photo down, let's move on. So we have come to the end of this webinar. So yeah, really thank you guys for joining. If you guys have any more questions, let me know. I'll give you guys 1 more minute. 1 more minute to ask me any more questions before I end this webinar. So until my time, 6:53, I'll be waiting for your questions. So meanwhile, while waiting for your questions, I would like to say that tonight, okay, for my time, it's tonight. It will be when I'm sleeping. It will be 2 a.m. for me when the FOMC news actually happens. So yeah, just take care trading. Please try not to enter any scalps just before the FOMC news. You can potentially get stopped out. And also Friday, we have the NFP. The entire week is really, really, very volatile. Hey, no problem, Juha. Hey, see you next time. See you next time. See you guys next time. Appreciate you guys for joining. All right. So let me just send that link one last time. Link 3. That's the link you guys can actually find me, can actually contact me there if you want after the webinar. So yeah, thank you, Juha. Thank you, Peter, Benny Brook. Thank you, Samuel, Julian, for joining. Hope to see you guys next time and really take care. Stay safe trading. Hey, goodbye, guys. I'll be ending the stream now.